Tech stocks surged today, with the S&P 500 and Nasdaq hitting record highs. This remarkable rise comes amidst a backdrop of geopolitical hopes for peace between the US and Iran. Here's a detailed breakdown of today's monumental stock market events. On April 28, 2026, the US stock market experienced a significant surge, with the S&P 500 and Nasdaq both reaching unprecedented heights. By 4 p.m. EST, the S&P 500 closed at 7,675, while the Nasdaq jumped to 15,200, marking record gains of 1.5% and 2.1%, respectively. This upward trajectory was largely fueled by a wave of optimism surrounding advancements in artificial intelligence and unexpected sales growth in major companies. Notably, Bed Bath & Beyond saw its stock skyrocket by over 30% after reporting a surprising increase in sales figures, signaling a potential turnaround for the retailer. Meanwhile, Qualcomm's shares gained momentum due to its involvement in AI technology developments, reinforcing investor confidence in the tech sector's future. Additionally, critical metals stocks surged nearly 26%, following news of a proposed acquisition of a prominent European competitor, which could reshape market dynamics in that sector. The context for this remarkable rally lies in the ongoing technological revolution, particularly in AI. Companies across various industries are increasingly integrating AI solutions to enhance efficiency and drive growth. This trend has attracted significant investment, reflecting a broader belief in the transformative power of technology. Furthermore, the market's resilience amidst global tensions, particularly concerning diplomatic relations between the US and Iran, highlights a notable shift in investor sentiment. Unlike previous downturns, which were often triggered by geopolitical uncertainties, today's market appears to be buoyed by the belief that these tensions may soon ease, fostering a more stable investment climate. The impact of today's market performance is profound, not just for investors, but also for the broader economy. A thriving stock market can lead to increased consumer confidence, encouraging spending and investment. As companies report strong earnings, they may also be more inclined to hire, fostering job growth and further stimulating the economy. Looking ahead, analysts remain cautiously optimistic. With continued advancements in technology and potential diplomatic breakthroughs, the market may sustain its upward momentum. However, investors must remain vigilant, as external factors, including inflation and global trade dynamics, could influence future performance. The upcoming earnings reports will be critical in determining whether this bullish trend can continue and whether consumer sentiment will solidify in the coming months. Today's stock market surge is significant for several reasons, marking a pivotal moment for both investors and the broader economy. The S&P 500 and Nasdaq reaching record highs means that millions of Americans are witnessing an increase in their portfolio values, directly enhancing their financial security. Analysts estimate that approximately 50% of American households are invested in the stock market, either through direct stock purchases or retirement accounts like 401ks. This surge not only boosts individual wealth, but also fosters increased consumer confidence, as people feel more optimistic about their financial prospects. The context surrounding this surge is critical. The technology sector, especially companies engaged in artificial intelligence, has been a major driver of this growth. Companies like Nvidia and Google have reported staggering earnings, fueled by their advancements in AI technologies. The rapid advancements in AI signal a transformative shift towards digital innovation, creating new opportunities across various sectors. Additionally, the rise in critical metals, such as lithium and cobalt, reflects a growing demand in technology and renewable energy sectors. This demand is indicative of a broader trend towards sustainable manufacturing and could lead to significant shifts in global supply chains. The impact of this market surge extends beyond individual investors. A thriving stock market can catalyze job creation and stimulate economic growth. Companies that are performing well are more likely to expand their workforce, invest in new projects, and increase wages, contributing to a healthier economy. Furthermore, as firms like Qualcomm enhance their AI capabilities, the technologies developed may soon become integral to daily life, influencing sectors ranging from healthcare to transportation. This integration of advanced technologies could lead to improved efficiencies and enhanced quality of life for many. Looking ahead, the outlook remains promising yet complex. While the current market momentum is encouraging, investors should remain vigilant about potential volatility and external economic factors such as inflation and geopolitical tensions. Policymakers and business leaders alike will need to navigate the complexities of a rapidly changing economic landscape. As industries continue to adapt to technological advancements, the ongoing evolution of the stock market could significantly influence investment strategies and consumer behavior in the coming years. The next quarter will be crucial in determining whether this growth trend can be sustained. The trajectory that led to today's stock market highs has been shaped by several factors over the past months. Recent economic reports indicate a strengthening U.S. economy, with job growth and consumer spending rebounding from the significant challenges posed by the pandemic. The Federal Reserve's decisions to maintain interest rates at historically low levels have also played a crucial role, fostering a stable environment for investors and encouraging borrowing and spending. Over the past year, the tech sector has been at the forefront of this recovery, driven by innovations in artificial intelligence and a growing reliance on technology across various industries. Companies like Qualcomm have been investing heavily in AI research, positioning themselves to capitalize on future trends and enhance their competitive edge. The market's optimism is further fueled by geopolitical factors, particularly hopes for resolution in long-standing tensions between the U.S. and Iran, which have historically influenced oil prices and overall market stability. As investors gain confidence, the lessons from previous tech booms, such as the dot-com bubble, remind us of the volatility that can accompany rapid growth. However, the current environment appears more sustainable, as it emphasizes tangible advancements in technology rather than speculative investments in companies lacking solid fundamentals. This recovery has significant implications for the broader economy, potentially leading to increased job creation and wage growth. As businesses adapt to a more digital landscape, we may see further investments in infrastructure and education. Looking ahead, if the trend of technological innovation continues alongside stable economic policies, we can anticipate a robust market that not only thrives, but also drives progress across multiple sectors. The next few months will be crucial in determining whether this growth trajectory can be maintained. Looking ahead, several scenarios could unfold from today's stock market events. The recent surge in tech stocks has sparked optimism among investors, with analysts predicting that the S&P 500 could surpass 7,800 by midsummer 2026. This surge is primarily driven by ongoing innovations in artificial intelligence, cloud computing, and renewable energy technologies, which continue to reshape consumer behavior and market dynamics. However, the landscape remains precarious. Geopolitical tensions, particularly between the U.S. and Iran, have the potential to escalate, leading to a market correction that could create significant volatility in tech stocks and ripple through global markets. Investors are acutely aware that such geopolitical uncertainty can disrupt supply chains and investor confidence. Moreover, the upcoming meetings of the Federal Reserve will be pivotal. Any adjustments in interest rate policy could shift investor sentiment dramatically, as higher rates typically lead to increased borrowing costs and reduced spending. Experts emphasize the importance of monitoring upcoming earnings reports from major tech companies, as these will offer critical insights into the sector's health. Strong earnings could bolster confidence, while disappointing results might trigger fears of a downturn. As these developments unfold, one pressing question remains: will the stock market maintain its upward momentum, or are we approaching a significant downturn? The implications of these scenarios extend beyond just Wall Street. A robust tech sector is crucial for broader economic growth as it drives job creation and innovation. Conversely, a market correction could dampen consumer spending and investment. Investors and analysts alike must remain vigilant, as the decisions made in the coming weeks will shape the market trajectory for months to come. The next few months will be critical in determining whether the bullish trend can sustain itself. What do you think will happen next for the stock market? Will it continue to rise, or are we facing a downturn? Share your thoughts in the comments and subscribe for daily deep dives.